Nigerian businesses are stepping into 2026 with renewed optimism even as insecurity and rising costs continues to strain operations. The Central Bank of Nigeria's December 2025 Business Expectation Survey shows a sharp improvement in sentiment, signaling stronger confidence in the near-term economic outlook. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Ukere. The aggregate confidence index climbed to 37.5 points in December and is projected to rise to 52.5 points within 6 months, reflecting growing expectation of improved business conditions. The survey conducted between December 1 and 5 covered 1,900 firms across industry, services, and agriculture, with a strong response rate of 97.3%. Industry leads sectoral confidence at 38.7%, with agriculture and services also recording positive sentiment. Businesses across sectors expect higher activities level in the potential, while mining and quarrying are expected to drive job creation. This upbeat outlook is underpinned by expectation of higher business volumes, a stronger naira, and easing borrowing costs. However, firms remain clear-eyed about persistent challenges. Insecurity ranks as the biggest threat to operations, followed by the high and multiple taxes, unreliable power supply, and elevated interest rates. Capacity utilization held steady at 49.8% in December, and construction recording the highest usage. Regionally, optimism is strongest in the northeast and weakest in the southeast. Though all regions reported positive expectation for the month ahead, the survey points to a resilient private sector betting on macroeconomic stability despite structural headwinds. If security improves and cost pressures ease, rising confidence could translate into gains in investment output and employment in 2026. Fresh signs of cautious optimism are emerging across Nigerian economy as both consumers and businesses closed 2025 and improved confidence encouraged by easing price pressure and a more stable economic outlook. Latest consumers and business expectation survey from the Central Bank of Nigeria shows that perception of price increase moderated in December. Consumers reported slower price growth for food and household items, with the price sentiment index improving from November levels, signaling that while prices remain high, the pace of increase is easing. Overall, consumers' confidence strengthened for the second straight month, climbing sharply in December. Household also expressed greater optimism about the wider economic alongside a noticeable improvement in perception of their personal financial situation and income prospects. Despite the brighter mood, concerns about borrowing costs persist. More than a third of consumers observed higher bank lending rates in recent months, although fewer know experts ahead. On the business side, confidence in the macroeconomic gains further traction. Sectoral optimism, while agriculture and service also maintain positive outlook, reflecting expectation of expanding activities and improving conditions. Businesses also anticipate supportive macro trends, including steadier naira and easing inflation expectation. Both firms and households reported reduced inflationary concern in December, driven by moderation in energy, transport, and exchange rate pressures, even as insecurity and interest rates remains key factors. Confidence in the central bank communication remains high, reinforcing trust in ongoing policy effort to stabilize the economy. Analysis shows that the survey suggests Nigeria may be turning a corner as inflation pressure soften and confidence improve. Sustaining the momentum will depend on keeping price in check, stabilizing interest rates, and translating rising optimism into real gains in income, investment, and jobs in 2026. Nigeria external position is set to strengthen further in 2026, with country's current account surplus projected to rise to $18.81 billion, equivalent to 11.16% of the GDP. This outlook contained in the Central Bank of Nigeria 2026 Microeconomic Outlook signals improving foreign earnings despite lingering external pressures. The projected surplus is $16.94 billion, that is 10.94% of the GDP. Expected in 2025, the CBN notes that stronger export receipts and rising transfer will continue to support the balance. Part of the improvement is a stronger goods account. Export earnings are forecast in 2026 from $54.59 billion in 2025, driven by gains in both oil and non-oil exports. Higher crude oil production supported by improved security around oil facility and renewed investment in the sector is expected to lift oil export revenues. Non-oil exports are also set to play a bigger role. Agricultural commodities and fertilizer exports are projected to expand further, backed by government initiatives aimed at strengthening the export value chain. New frameworks, including the National Export Trading Company and the National Intellectual Property Policy, are expected to boost earnings from manufactured, agricultural, and creative exports. On the import side, total imports are projected to rise to $43.27 billion in 2026 from $39.92 billion in 2025, reflecting increased demand for capital goods as economic activities pick up. This expansion, while supportive of growth, will continue to exert pressure on the external balance. The service account deficit is expected to widen to $13.68 billion, up from $12.80 billion in 2025, driven by higher payments for business, transport, and research-related services, as well as rising freight costs linked to increased non-oil import. Similarly, the primary income account is projected to remain in deficit at $8.62 billion as attractive domestic yields continue to draw foreign portfolios inflow, leading to higher interest and dividend payments to non-resident investors. In contrast, the secondary income account is expected to strengthen significantly, with the surplus rising to $26.13 billion in 2026 from $23.82 billion in 2025. This will be supported stronger diaspora remittance and higher transfer inflow, some of which are expected to fund election-related activities. Recent data also already points to these mixed dynamics. Nigeria recorded a current account surplus of $3.42 billion in the third quarter of 2025, lower than both the previous quarter and the same period in 2024, as external obligation rose despite improved oil earning. Foreign direct investment inflow, however, surged sharply in third quarter 2025, reflecting renewed foreign interest in the economy. Analysis shows that Nigeria's rising current account surplus reflects progress in the oil sector reform, exports diversification, and remittance inflow. However, growing import demand, widening service deficits, and rising income outflows underlines the need for deeper structural reform to sustain external stability beyond 2026. Nigerian capital market is set for tougher oversight in 2026 as the Security and Exchange Commission moves to aggressively enforce market rules under the newly enacted Investment and Security Act 2025. The SEC Director General, Dr. Emomotomi Agama, says the new law significantly expands the Commission's supervisory and enforcement powers, positioning the regulators to climb down more decisively on market abuse, insiders dealing, fraudulent investment scheme, and other forms of misconduct. According to the SEC DG, enforcement action will be firm, consistent, and guided by due process, with aim of strengthening market integrity and rebuilding investors' confidence. The Commission's view predictable regulation and consistent application of rules as critical to attracting long-term capital and deepening the market. Beyond stricter enforcement, the SEC plan to improve regulatory efficiency through greater digitalization. Key processes such as approvals, filing, and disclosures are expected to become more automated, reducing delays, cutting compliance bottlenecks, and improving transparency across the market. The Commission also intends to roll out stronger disclosure requirements, including environmental, social, and governance reporting, while conducting a structured recapitalization and governance review of market operators. These measures are designed to improve financial resilience, risk management, and overall market stabilities. Investors' protection remains central to SEC's agenda. The regulator says it will continue to balance wider market access with strong safeguards, especially for retail investors and small and medium-sized enterprises. In addition, a nationwide financial literacy program is planned for 2026 to boost investors' awareness and reduce exposure to fraudulent schemes. This is to say, the SEC tougher stance signals a shift towards a more disciplined and transparent capital market. If effectively implemented, stronger enforcement, digital reform, and improved disclosure could deepen investors' trust, attract fresh capital, and support Nigeria's broader economic transition in 2026 and beyond. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. The Dangote Petroleum Refinery has warned that petrol pump price could climb as high as 1,400 naira per litre if Nigeria returns to full dependence on fuel imports, underscoring the growing role of domestic refining in stabilizing the downstream petroleum market. The refinery issued the warning while dismissing reports that it was shutting down for maintenance, describing the claims as false and misleading. It says the speculation was being circulated to justify recent increase in petrol pump price and to stir public anxiety over fuel supply. According to the refinery, without large-scale local refining, fuel importers could dominate the market in a post-subsidy environment, pushing price sharply higher. It maintains that its operations have helped moderate price movement by reducing Nigeria's exposure to volatile international fuel markets and foreign exchange pressure, the company insisted that production remains steady and uninterrupted, with the capacity to supply between 40 million and 50 million liters of premium motor spirits daily, depending on the demand. It disclosed that on January 4 alone, it produces 50 million liters of petrol and evacuated 48 million liters through its gantry, with existing stock sufficient to cover more than 20 days of national consumption. On maintenance concern, the refinery explained that routine work on specific units does not affect overall output due to integrated design of its facility. Other key units remain fully operational, ensuring continuous production of petrol, diesel, and aviation fuel for domestic markets. The refinery added that it has maintained consistent petrol supply since mid-December, loading between 31 million and 48 million liters. Its ex-gantry price of 699 local refined products, noting that domestic sourcing could help moderate pump price, conserve foreign exchange, and strengthen energy security. It also cautioned the public against misinformation, stressing its commitment to stable supply and Nigerian broader economic recovery. All right, before we call it a wrap today on Business Point, let's take a quick look at the Nigerian stock market. The Nigerian stock market kicked off the year on a strong note, with a fresh buying interest pushing total market capitalization above 100 trillion naira mark, a major psychological and financial milestone that signals renewed investors' confidence. Data from the Nigerian Exchange Limited shows that total equity market capitalization climbed to 101.81 trillion naira, driven by broad-based gain across key sectors. The NGX All-Share Index advanced by 1.74% to close at 159,218.22 points, lifting both month-to-date and year-to-date returns to 2.32%. The rally was fueled by strong demand for stocks such as Cadbury Nigeria, Feedsin Healthcare, and Champion Breweries, reflecting the typical early year portfolio repositioning known as the January effect. Market breadth was firmly positive, with 73 gainers against just 8 losers, pointing to widespread participation rather than isolated price movements. The crossing of 100 trillion naira threshold highlights the growing depth and the resilience of the Nigerian capital market, supported by improving sentiment around macroeconomic condition and ongoing structural reform. Increased coordination among market operators, regulators, and policymakers has also strengthened transparency and liquidity, as well as investors' protection, helping to attract both local and foreign investors. Trading activities shows selective demand across banking, industry, and consumers' stock, alongside rising volumes, suggesting a more active and confident market environment at the start of the year. Analysis shows that the 100 trillion naira milestone reflects a strong early year optimism and renewed risk appetite. Sustaining the rally will depend on earning performance, interest rates direction, and continued macroeconomic stability as investors look beyond January momentum. All right, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms using @GlobalTVNG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.